Hello, today we're going to be doing a video here on Realty Income, ticker symbol O. They just had their Q3 results. As you can see, their net income available to common stockholders was 233 million or 0.33 per share. Their normalized FFO 739 million, which is 1.04 per share. Their AFFO, which we're going to be using, was 721.4. Achieved same store revenue reserve growth of 2.2 and a rent recapture of 106.9% on properties released. They invested $2 billion in 289 properties under development or expansion at an initial weighted average cash lease yield of 6.9%. They just raised some money at an average weight of 58.58 per share, which was common stock. They issued another 550 million, 4.875% senior unsecured notes due July 2030. Okay. And then their net debt was annualized pro forma adjusted EBITDA was 5.2 times percent. So those are just their company highlights, what they're highlighting. You can see their comments here by the CEO. But we're coming down here looking at total revenue. So it was at 1 billion compared last year 837 million. As you can see here, the net income per share is down a little bit, but that's okay. They've also been, investing heavily. Their funds from operation, which is FFO, 736 compared to 597. If we come down here though to the adjusted funds, 721.4 to 603.9 is 19%. So that gained 19% year over year. This is just talking about the 3 months ended, so just the quarter specifically, that quarter specifically. As you can see here, though, if you jump over here, the 9 months ended, which should be, from the start of the year to September, year over year. As you can see, 2 billion compared to 1,767,000,000. So they're growing. So 2.99 to 2.92 or 1.02 to 0.98. So they continue to grow that AFFO, which we will use when we're going to be calculating the free cash flow. We're not going to use free cash flow for a company like this. Um, as you can come down here, you can see the dividend increases. They announced their 104th consecutive quarterly dividend increase, which is the 122nd increase in the amount of dividends since listing on the New York Stock Exchange. So they did increase it by 3.2%. So we'll use a 3% growth rate. This will show you about their leases, the number of tenants, the changes, all that stuff. Their acquisitions. You can read through all this stuff. How they raise capital, their liquidity. Their net income per share is now revised to 1.25 to 1.32. The FFO per share is revised up a little bit. The low end 3.98 to 4.01, so they're doing good. Over 98% occupancy still. Their acquisition volume, instead of using 7 billion, they're now using 9 billion. There are big deals that they've been having done lately. So there's a lot of good things going on. If you come down here, though, if you look at their total revenue, their expenses, net income, AFFO, all that stuff is right here. Cash dividends per common share, how much is paid, um, diluted FFO, all this stuff that people like to look into. I just look into the basic ones. And we're going to scroll down here to their assets. This will show you their net debt too. Net debt right here is increased. But we already know that already because they're acquiring properties. But we'll come down here to their total assets. We have 55,336,000,000 compared to liabilities 23,513,000. So if you come down over here to their net asset value, we put this in there. They come to a net asset value of $47.15. This is good to look into because they're trading at around $50 right now. So we can go ahead and put that into our calculation, probably to our net asset value. We're going to come over here to our discounted cash flow. 2884 is about the sum of all their quarters this year put together with the 4% growth rate. 10% discount rate, 675 shares. We're going to come to a discounted cash flow price of $62.88. Give ourselves a 10% discount. We're at 56.59, but give ourselves that 20% margin of safety, and we're trading at $50.31. So, according to our calculations right now, if they can continue to grow their AFFO at 4%, they are worth $50.31. Their dividend discount model. So let's just come over here to Realty Income. Let's find out how much are they paying in dividends. Well, we already know that, but we're going to go here anyway, so you can look at this. They're currently a dividend yield at 6.12%. Their annual payout 3.07. So 3.07. Update this. Growth rate. We said what, 3%? For a company like I'm going to use the 8% discount rate, but with the 10% discount rate, it brings it down to $45.17. If you come to their current price, let's see exactly what they are trading for at this moment. Put it in there. Okay. I think I put the number 0 instead of the letter O. $50.33. But we're going to give ourselves that 8.5. Let's do 8.5% discount rate. And it's going to bring it to $57.49 if they continue to grow that dividend at 3%, which we just saw they just grew it at 3.2%. I don't know how much of a difference it would make if they did continue to grow at 3.2%. See, not much, but we will downgrade that to 3% and 8.5% discount rate because we want a little bit more margin of safety. Just always like to be conservative. Some people just like 8% in general, but I don't trade that way because I want to make some money. So $57.49, which means it would be a difference in price. So if you bought at $50.33 and sold at $57.49, you would make 13% of your money. So those are just things. We'll put this into our final calculation over here, 57.49, and then we're going to go with 56.59 because it's the 10% discount rate. 56.59. Benjamin Graham. We're going to go ahead and do this one just because you'll just see something here. I want you to see something here with their evaluating them like that. If we can come over to their EPS diluted. God damn it. Hold on. Alright, their EPS 1.31 for the 12 months, okay? So 1.31. Growth rate we know is about 4%. 4%. PE no growth 10. Company like this, 30 PE ratio. If you do want to see something for them right now, if you come over here, their EPS 0.34 for the fiscal year. Revenue dividends 0.26 for that quarter. It's not showing what I wanted it to show, but that's okay. But we're gonna their PE ratio is pretty high. PE ratio, Realty Income. There it is. Okay, the PE ratio for Realty Income stands at 38.79 as November 8th. So right now we're doing it to 30. So that would bring it to $43.29. We want to put in that net asset value instead of gram right here. So we're going to go ahead and go with 47.15. You wouldn't really want to do a gram valuation for a company like Realty Income. So it gives us a value of $53.47. Give ourselves a 10% discount rate, $48.37. So this is currently my calculation for Realty Income. I'm going to go ahead and let you guys see the struggle I did real quick with Realty Income in the video. Just so you can see how much of a dumbass I am sometimes. And my brain just gives me little farts, especially when I haven't had coffee in the morning. It is 11/10/2023. So, about 8 a.m. in the morning. So, I need to get some coffee. But I hope you guys have a great day.